Hi, this is Lex, and welcome to the FinTech Blueprint. It's your podcast about fintech, decentralized finance, digital banking, investing, robo-advice, artificial intelligence, and all the other frontier technology that is transforming financial services. To get more content, like an illustrated transcript of this conversation in your inbox, subscribe at fintechblueprint.com. So without further delay, let's jump into today's episode. Welcome, everybody, to the podcast. I'm really excited about today's conversation with Yenwen Feng, who is the co-founder at Perpetual Protocol. He has a fascinating background of entrepreneurship spanning technology, mobile gaming, and then, of course, high finance and decentralized finance, and the current iteration of what Web3 looks like on the exchange side. So I'm really excited about this conversation, and let me welcome Yenwen to the podcast.
Hi, guys. Thanks for having me.
Absolutely, my pleasure. You have such a brave and fascinating background. It looks like you've been an entrepreneur almost, for a very long time in your career. Can you talk a little bit about how you started and what kind of companies and what kind of industries you started working in?
Sure. So I'm a little bit older than like most of people like in the crypto. So yeah, I did have a lots of experience. But I think after graduate, I as a software engineer, I just want to get into like working on like some product. I'm always very interested in kind of like building product and then push it out for people and then see if they like it, if they want to use it. So I think I start with working with, year 2000, so internet bubble at that time, and working on a mobile internet solution in Silicon Valley. And yeah, so I think that was my first job for like just like building software.
That's quite an introduction into the workforce, right? The starting off in the internet boom, but very quickly you went into the combination of technology and financial services. So it looks like even in 2004 you were already founding companies.
Yeah, that's right. So I think like the first company I'm building mobile internet solution at that time is quite interesting, but I think the hardware is not there yet. So year 2000, people are still using feature phone, and then that's actually most of the phone are not programmable. So it's only like one or two device can do that. So the company actually shut down like in like 2 years, and then I move on to working in a VC. I mean, from Hong Kong for a little while, and then I move on to working in a financial kind of like a software builder, and then we build software. I mean, for fintech company, for brokerage, for banks to hedge their like derivative risk. So that's actually how I get my most of my DeFi knowledge at that time. And I think fast forward to 2004, I kind of like feel that I always want to like do something like kind of like test it out if I can make it or not. So I just like start kind of like working on my first company in 2004.
And what was that company? What did that company do? What was your insight at the time?
Yep. So that company is called Wheel Mobile. So it's actually it kind of like Robinhood, but on a feature phone. So I built that. So I think the reason I want to start working on this is because I bought a new phone, which is I still remember it's Nokia 6600. I think that's the first phone that you can actually, write a meaningful software on that. And it's quite amazing that I can actually, the first day I received that phone, I just like create a game on that. On top of that, it's really interesting. So I just want to build something on top of that. At that time, I'm working in a fintech service company, so I thought that I would just build a Robinhood on that. And that's just how it gets started. Like I just asked my friend to join the company. For people just start writing a software, and then we launch it. I think within like 2 or 3 months, really quick. And then I think for the first year, we only got like 200 customers, and then the company just like at age of bankrupt.
You might have been a little early.
Yes, but I mean, like at that time, I really know nothing about like running business. I just want to build. So that's how I mean, how I get Scar gigs. And I think, like I said, for firstly, 200 customer doesn't mean anything. And then I think we hang on for one more year. You probably have, like in the second year, we probably have like 1,000 users. Still mean nothing to, for a consumer app. But things got changing at that time because I was in Taiwan at that time, and people are talking about 3G. The carriers want to upgrade their software. So at some point of time, we actually hook up with the carriers and also the brokerage house, and then they want to subsidize the cost, which means that if you open, kind of a trust swap account, for example, you open a brokerage account, and then you also get, like a service plan from the carrier. I mean, the software is free for you. So because of this, I think the third year we actually got 200,000 users. But still, I mean, like we are just get lucky. I think we just got lucky.
Well, manufacturing luck is the core ability of the entrepreneur. Without it, there's nothing. You can only be prepared for it to come. And it sounds like that was a very foundational experience. Where did you go from there? What are some of the takeaways from that experience, and how did you use it in your future projects?
Actually, I think the thing you just said, not really like manufacturing lucky, but trying to be in a position that once something good happens, you can capture that. I think that's really important. That's just what I feel. I mean, to be honest, I don't think I work really that hard or I'm really that smart to capture that, that opportunities. But I do kind of like stay in the field for longer than others. I don't quit. So I think that's just, I mean, like you have to be prepared for that, I think.
Makes sense. Yeah, it's almost impossible to market time, but you can have a really good intuition and create exposure and stay in place for when the market comes to you, which I'm sure was an experience you had in DeFi as well. But still, if we look at some of the other foundational things that you've done, especially around mobile gaming, can you talk about what drew you towards that, and sort of what was the environment and what was going on in the world as you got a sense for that?
Sure, sure. So after the mobile trading app, the mobile fintech app, we kind of feel that the market is there, so we kind of capture that market, and we just want to move on and do something else. At that time, we see a new like wave for like web games, so we decide that we want to build web games, and also like I think we work on that for a year, and then Facebook gaming actually start like popping up. So we, like we just like build like those like I mean like Facebook games at that time. I think that's like 2010, and I actually we are not doing that well at that time because I think for gaming it's more like hit driven. So keep like pumping on new titles, but we don't really capture the market. So but it's still like a really good experiment because like I said, I kind of like I said, I mean just before that you have to kind of like prepare and then wait for like if something good happen, you can capture that. And like the company somehow catch up to the Facebook gaming wave. So I think that's really good. We just don't monetize that good enough, but the skill that's a good experience. So I kind of like get more experience on like how to read the market, and then you also like how to pick a project that I think that will have a huge growth in the near term.
Can I ask you about this idea of a hit-driven business versus, more like a recurring business? So the brokerage app that you talked about, even brokerage is a little bit of a hit-driven business in the sense that the markets come and go versus something like asset management. But still, you know that there's going to be always demand for people to participate in the markets. And so if you're providing the access to it, that's sort of a steady flow. Whereas, in media, it is trying to figure out a fashion, and it is trying to catch the lightning in a bottle at that particular moment, especially in an environment like social media. What was the approach that you had to thinking about fashion and what was popular and how to make something that could be a hit? How did you think about it?
That's a really good question. Actually, I don't think I'm good at heat-driven business. I'm more good at, like technology-driven business. I do feel that for heat-driven, I think how to read the market is really important. But for heat-driven business, like for games, for like media, for maybe like record business, I mean, those are more, you have to read the general market, the market segment. If you are talking at young people, what they want, you have to read their mind or what they are expecting for the future. I think that's something you have to read. I'm more good at reading, like technology trend. Like I said, like mobile internet or like Facebook gaming. I think that's something I'm more good at, and I'm more taking a more like systematic way. So I mean, my co-founder and I, we actually will keep track of all the new technology happens. So we have a kind of like big table on our notebook or on the whiteboard that we keep track all the technology and then the new development as a y-axis, and then kind of like how do we think, for example, VR, if VR happens, what will happen next? So we just try to build that kind of like a roadmap thing for the technology, and then we try to figure out that what's the best entry point for us. So I would say that's how I do feel that it benefits us a lot, but that's how it works on our side. Yeah.
That makes sense. And I think the connection between technology and platform shifts and, pop culture and what people are doing is demand. And so I think a lot of folks who have good timing in part have that timing because they know where demand is going. And absolutely, you can do that by, if you're Snoop Dogg or Tom Brady or, some other celebrity that's right now being mega sponsored by a crypto company, you can do that because you have a big following and people are telling you what's going on and so on. But at the same time, if you understand the platform shifts, the tech platform shifts, like you mentioned with mobile, and then the opportunity around Facebook gaming, then you can get to a place where the demand's going to show up because this is the new frontier. And I think what's interesting also is your earlier point about who brings the demand. So in the case of the mobile brokerage company, it was this partner that was helping open up accounts, and in the case of the gaming experience, it was the influx, I'm guessing, out of Facebook and the push that they were growing to grow that ecosystem. And so I think that is, in fact, quite insightful in terms of finding new platforms, where to go and where to build.
Yeah, true. Yeah, I think, yeah, you know it. That trying to find that channel, I mean, like trying to onboard that the users that people don't really think of, I think that's really important. So that's really good point. And also, like one thing I want to add is that I've been like working on my own like startup for a while, and I do feel that actually trying to come out the idea or the project you want to build is a little bit tricky. I mean, like most of people, they only think about this is the thing I want. They think about, from their stuff on their self, like, for example, like, I go to a restaurant, when I order, it kind of like got me thinking that, oh, should we all order like by cell phone? Like, should we have built a mobile app for ordering or something like that? I mean, like, most of people come out the idea with their own like experience, but personally, I'm actually against that. I think you should think about the trend. You could think about others, not yourself. So that's actually why we build this like massive technology trend and also try to figure out that what's the roadmap of that technology, and then also like what's the best use case for that technology, who should we target, and then how we can enter.
Yeah, so thinking much more about the business rather than sort of your subjective experience. I have a really similar story about everyone has this idea of, like you said, either how do you order in a restaurant or how do you split the bill in a restaurant, or like if you go into a bar and if only I could order my drinks before I get to the bar in an app so I don't have to wait for the bartender. This was, I heard this pitch probably if dozens of times, if not hundreds of times. And I'm convinced that more people have that idea than have ever Googled it or searched for it in an app store. Like if you have an idea, and at least search for it if people have already spent years building it out.
Yeah. Yeah.
So you're being quite modest. I mean, your Cubie, which I think was one of the mobile apps that you had built, had over 10 million downloads. So, it seems like you did hit the collective imagination as you continue to develop the skill set.
Yeah, so Cubie is actually, yeah, it's actually quite an interesting experience. I mean, to myself and then to the team. So we built Cubie around like 2013, 2012, I think. And I think, I mean, it's a mobile messenger app at the time when, I mean, like people don't really understand like, how the messenger app will become. So we built that. We actually have early success. Like you said, we have like more than 10 million downloads. I mean, mostly in Southeast Asia, Taiwan, like Thailand and other place. I mean, like we add like several like interesting features like drawing, taking photos, like drawing on photo. There are lots of like cute features that we put in. I think like we have like early success. But to be honest, after a certain time, I mean, like it's become really hard to compete with other like more established players like like WhatsApp and Facebook or Line in Asia. So in the end, it's not really going that well for the app, and then we just pivot. I did learn a lot of things. I mean, during that venture, though, I think that even if like you build a thing that it's quite common, but if you have the right platform or like the trend, if you capture that trend, actually you can definitely ride the wave and then achieve a certain height. But after that, I think that's really interesting that you still need to have something unique than others in order to survive. So that's just my first experience at trying to work it out and then it doesn't work out. But yeah, it's a really interesting experience to me.
Absolutely. So let's get into crypto and DeFi, and maybe we hop into your kind of your journey into the crypto ecosystem, and what was Cinch Network, and maybe what was the journey from Cinch to Perpetual Protocol?
Sure, sure. So we start Cinch in 2018. At the time, I think that people are kind of like crazy about, there are lots of ICOs, people are crazy about crypto. And I think we look at crypto Kiki first, and then we want to build games. I mean, just a crypto games, but we quickly found out that it's probably not going to happen. It's too early. And then we just look at like other ideas. Like I said, we actually built a huge map of ideas that which we build, and then we end up picking something like we want to actually build a token on top of another token. So you kind of like a derivative. If we can have this framework, then we expect that there are way more tokens, I mean, in the future. So the derivative will become more popular because there are way more tokens. So that's the idea. And for
Can you open this up a little bit more? What do you mean?
so like I said, we have a map of lots of like different chains. So we have like crypto games like CryptoKitty, and then we have this idea that can we build a token on top of another token. For example, WBTC is a wrap of BTC token on ETH network, right? So it's a ERC20,
Yeah.
is I mean like wrap of BTC. So that's the thing I called that you can build a token on top of another token. It might be like equal value, or it can be a derivative, which means that at certain criteria it has the same value or more value than the original underlying.
Yes, absolutely.
Yeah, so that's the idea. And then the reason behind this is that we do believe that there will be way more tokens. Actually, there are way more tokens than before right now. So if we have a solution that, like for example, if we want to issue a token, like ABC token, and it's a really simple way that you can build an option on top of it, and then you can sell the option. I think that's really cool. So that's why we want to build Cinch. So Cinch is actually a decentralized option protocol on top of any token.
Right. And so you did this right at probably the worst time possible, which was 2018, as It was the, the height of regulatory, and the regulatory, not scrutiny, but at least anxiety, and just the narrative about what is now Web3 becoming very negative. Can you talk about sort of how the founding experience went, and then what happened?
Yeah, yeah, that's really interesting timing. I think when we launch the project, I think it's, I mean, the whole like market is so crazy. So it's easy to get attention. So we talk to like people. I mean, like people commit, they want to invest. But fast forward to like June, July, actually, I mean, the market crash. So people are become more conservative. So the funding we are targeting, actually, there are several like investors. They just like back out on our deal. So we end up like unable to finish our fundraising. But I think that's still like we learned a lot at that time, and just a good experience. But I think at that time we talked to Binance a lot for the investment, but because it didn't really like went through, so they invite us to join their incubation. So we actually go to their Binance incubator after.
Let me ask you kind of one step before this even, right? You went into the feature phone direction, then you went into mobile gaming and the Facebook gaming trend. How and why did you recognize tokens and crypto assets as interesting? And can you talk about kind of your intuition or your process for saying, yes, I want to commit to this?
Sure, sure. That's a great question. So for my co-founder and I, we are not really crazy about trading tokens, but I mean, both of us, we think the smart contract is really amazing. I mean, if you can build a trustless software, I think that's really amazing. We cannot do that before. You can think about this. I mean, like, I'm actually from Taiwan. I mean, I don't study in US. I actually don't have like connection to like global like ecosystem or anything. But we build a fintech app based in Taiwan, and then people can trust. I mean, normally if you want to build a fintech app, you have to work with either big banks or you have like really huge investor backing you, or you work with like governance or like you have like a certificate from governance. But trustless software or like smart contract enable us, even if we are based in Taipei or Taiwan, we can build something that people don't need to trust about us. They trust the software because the software is trustless, and then they can trade on top of it. So I think that's really amazing. I mean, at that time, we just think that this definitely be the future. We want to write anything that involve like trustless software. So that's why we jump on.
I mean, I think it's just so awesome and just fantastic and spectacular and totally the right outcome for the world that, I mean, in many ways, just very literally the best team wins, and you didn't have to do the Silicon Valley game or do the Wall Street game or do the London game, and were able to plug into this enormous group of people that is both social and economic and carve out a space that works. And the system is set up in such a way, as you say, you can contribute by building, and it's a lot less about diligence on the founders and the right colleges or this thing or that thing, and instead it's about does it work, for how long has it worked, is it audited, is it handling things well, and that's incredibly empowering, I think. And you can you start seeing it in the numbers, actually, where the dispersion of DeFi projects is in a much more interesting and diverse way versus how venture capital writes their checks.
Yeah, totally, totally. Yeah, I think I mean, it's actually like 4 years after, I mean, like we first like, working on Cinch. So I do feel that, like step by step, we are, almost there. So people nowadays, I have all my assets on crypto. I trade asset using Uniswap, using all the decentralized projects. I think I mean, I even pay my credit card using crypto. So I do feel that step by step we are getting there. So it's, yeah, quite amazing.
Okay, so you said you joined the Binance incubator, and that's getting you towards Perpetual Protocol, right? And the idea of the automated market maker. Could you tell us a little bit more about that process? And then I'm excited to dive into Perpetual and learn more about it.
Sure, sure. So after joining Binance Lab incubation, we're actually working on another concept called Decor. It's a crypto accounting software. I mean, because of market crash, so we just want to work on like something that's practical. It's not like DeFi or something. And also at that time, we got investment from Binance, so they invest in using their own token. So it's like I remember like the first day we got the token is like $10, and then this after like a week it goes down like to like $4. So I mean like
Yes,
so our runway just like cut in half and
such a great industry to work in. Yeah.
so yeah, so we just like trying to we want to work on something like more practical. But like working on that for several months, we're working with a content in San Francisco for a while, and we see actually Uniswap picking up. So Uniswap, I mean, we learned about Uniswap in 2018. We think it's very like interesting idea, very simple, but nobody knows that its potential. But in 2019, actually people start using it, people start launching token on Uniswap. Actually, it's quite interesting. We see how the AMM actually work and then why people want to use AMM. So I mean, we see like Uniswap's, the trading balance slowly picking up, and then at the same time, Synthetic is also like creating a very interesting tokenomic and also like product. So people are staking like SNS token at that time. Like, so I think that's really interesting. And we are working on this accounting software, but at the same time, we
Yeah, can I ask you to open up some of these insights? So, why do you think people were drawn to the AMM model? What about it generated usage, over something like the order book model or the centralized exchanges? What do you think it was about automated market makers that drew demand?
That's a very great question. In 2019, I think that's the only way you can actually launch your own token. So, you are a project or or anything you want to do, you want to launch a token, you can actually just provide liquidity on Uniswap and then you have a token market. I think that's just such a simple concept. Actually have a lot of adoption. Like people just use it because I mean Uniswap is so permissionless that anyone can use it. They can build on top of it. They can swap token. It's just like the whole like permissionless and mechanism and also like become your own LP. It's not easy before Uniswap. So I do feel that it changed everything in DeFi because of Uniswap.
Absolutely. Okay. So you're transitioning from Decor to the idea around Perpetual.
Yes. So after seeing that, I mean, a lot of debate within the team, and then we decide to just drop the Decor, the accounting software, and then focus, try to pick up Cinch again. So Cinch, like we talked about before, like it's an option protocol, but it doesn't based on ANM. So we want to add the ANM into an option protocol. We actually, did some research, and then also at the same time we do other research, but we found that option is quite hard. So we want to work on other financial instrument, and that's actually why we want to work on perpetual swap.
Gotcha. Okay. So how does Perpetual Protocol work? What is a perpetual swap? What does it do?
Cool. So perpetual swap, it's actually, I mean, first kind of like popularized by BMax in 2016. So perpetual swap is actually a future, but it works a little bit different. So in general, futures, I mean, in traditional market, it expires, I mean, a certain point of time. So it expires in a week, in a month, or in a quarter. So they have like quarterly futures, like weekly futures. And BMax at that time, they actually figure out they want to build this like financial instrument that actually don't expire. So it's not really expire like weekly or monthly, but actually underlying of this financial instrument is that it expires every day. But they create another mechanism called funding payment that, I mean, given like a period of time, maybe like 8 hours or an hour, they will check like people who holds long and short position, and then try to make sure like people pay funding to each other to maintain the price peg of that financial instrument pegged to a certain index. So it's just like a future that never expires, but you have to take care of the funding payment that you might need to pay or receive. So I think this is quite interesting. It's a token new. It's kind of like crypto native financial instrument. So we really interested in like trying to make an AMM. I mean, using this financial instrument.
Right. So one of the ideas that I've been carrying about which DeFi projects succeed and which don't is this idea of kind of a compression. Like, when the first Nintendo games came out, everything's very pixelated. There's very little information you can actually store, and so all the information is compressed to these abstractions. And similarly, in the beginning of the internet, there's not a lot of space or there's not a lot of bandwidth, so all of your pictures, all of your music is compressed down and then sort of opened up again. One of the repeating patterns in DeFi has been to figure out how to compress the essence of a traditional financial instrument, which normally might have trading desks and lots of off-chain spreadsheet or capital market software and lots of negotiation and legal agreement and all that stuff that takes up a lot of time and is complex. But you take that and you compress it down to its essence, which is essentially people want forward exposure on a rolling basis, and what you're describing is a really clever approach to being able to do the future on chain, but automating away some of the things that are non-essential, some of the things that are not at the very core of the instrument. Is that a fair way to think about it?
Yes, yeah, definitely. Yeah, I think that's definitely the hard part, that trying to take a traditional financial instrument and then make it work on chain. Yeah, I think that's quite challenging.
Okay, so let's talk a little bit about where Perpetual is today. What are your volumes like? How many users do you have? How do you think about, the growth of the project?
Yes. So for Perpetual Protocol right now, we actually just launched like V2 like 3 months ago. But totally, I think for the past year, our trading volume is around like 36 billion USD. So it's quite a good number. And then we don't really have like incentive program. So people trade on us because they want to hedge or they have like certain like trading strategy on top of us. For the users, we are more like sophisticated like platform. So we have around maybe like hundreds to 1,000 like weekly active users on the platform. So yeah, and for V2, we just on V2. I mean, like it's still quite early, but for V2, we actually build on top of Uniswap V3. So we have this like nice feature from Uniswap that the liquidity is concentrated, so it's much more capital efficiency than like all other like similar projects. And I mean, we actually, if you want to provide liquidity, you can also have leverage up to 10x. So it further increase the capital efficiency. So I think like on the V2 just launched, but we do see like some success on the capital efficiency side.
How do you think about growth? Where are your clients coming from? You said they're quite sophisticated, but as you look to the future, what do you see? How do you see the market expanding, and what kinds of clients are your best clients? And then how do you see more converting in?
Yeah, that's a good question. So right now, most of our users, because it's decentralized platform, so we don't really know them. But so a group of people, retails, so they, from time to time, they just want to go long or short on certain asset. So they come to our platform. They are more like, I believe in decentralization. So, like they only want to trade on like decentralized projects. So I think that's one group of people. The second group is quite interesting. So they are like traders, but not like traditional traders. So traditional traders, I mean like people who trade, on those like huge trading firms or JP Morgans or other place, or they trade on like hedge fund or other place. But we are seeing actually a new group of traders. So they might not have like financial engineering background, but they understand smart contract so well, so they can build bots. they learn like how to build a strategy, and then they implement that strategy on top of us and all other protocol. So they just use bot to trade. So we are seeing like this group of people, or maybe like some of them have like trading experience like before, but this like group of people, like from actually around the globe. I mean, they are like people like from like South Africa, people from like Europe, like other place. So I think that's really interesting. More like crypto native traders group. I think that's quite interesting. And then the third group is just like a traditional market maker, and then they some of them they trade on DeFi as well. So they just I think they just build some strategy on both of us and others. They can either hedge it on our platform or do other things. But that's basically like three group of people that we are seeing right now.
How do you think about the different chains and the different approaches to scaling? What's the protocol strategy as it relates to picking, essentially the venue where the capital is and the venue where to expand? How do you think about it? How do you prioritize it?
Yeah, that's a great question. For us, we have a constraint that because we build on top of Uniswap V3, and Uniswap has this like business license, so we can only go to the chains that Uniswap has already deployed, which means that we can only go to Arbitrum, Optimism, Polygon, and ETH mainnet. But to be honest, if we can deploy it on every chain, I mean, like we definitely want to try like different options, like Avalanche or others or Polygon. Right now, I think we are in a stage that still most of assets are still on top of ETH. I do believe that ETH will continue the dominance in the future. But like Solana actually have their own ecosystem, Terra has their own ecosystem, and Avalanche has their own ecosystem. So I do feel that I mean like for a project like us, we should deploy more chain than just picking on like one chain. But yeah, I think that's what we think. But still, I mean, we are running on Optimism right now only, and I mean, it's quite nice. I mean, like it's really fast, and then I think everything it doesn't really have any problem. That so I think we will keep on. I mean, building on like ETH layer 2 for now, and then just like watching the development of other chains.
Fascinating stuff. I want to, maybe this is a selfish question, but I want to end on a question around the role of a perpetual in an investment portfolio. And obviously not a financial advice, and any crypto holding is within the context of a broader asset allocation that's assigned, that is matched to a person's risk tolerance and risk capacity and their goals and all of this. But when thinking about somebody who's managing a crypto portfolio, whether it's a dedicated fund or whether it's a large trader, what is the role of a perpetual? What do you think is like not the right, but what is like a healthy or useful exposure for the instrument, and how do you see people using it?
Cool. Yeah, that's a really great question. For Perpetual, I think this is just, like what we provide or like what other similar like project provide is a venue that you can actually leverage without loss of cost. So the trading cost is much less than if you want to hold the spot asset. So it depends on the strategy, but if we think about like maybe like a treasury of other projects, if they want, I mean, I think they can, I mean, they are like different strategy they can use, like they can do funding rate arbitrage, I mean, or they can do basic trade. There are like certain like strategy. If you put in a perpetual into that strategy, you will make it much more either like, I mean, much more profitable, or it can actually create lots of new opportunities for the token you have. I mean, it depends on like what's the token you have, and also like what kind of a risk parameter you are looking for. But I do feel that it definitely adds another dimension besides just holding spot asset. You have lots of control. I mean, you can short, you can do basic trade, you can do lots of much more things than before. So, I mean, just like traditional finance, if you want to build a portfolio, you can use option, you can use futures, you can use derivatives that actually increase the capital efficiency of your investment. So yeah, I would just say Yeah, it's definitely make the portfolio management much better than just holding spot asset.
I think just having these tools, which are quite sophisticated tools, having them be in a native DeFi format is really interesting. And then as blockchains expand and become more connected and are able to generate more computation, I think we're only going to see increased growth and sophistication in the types of things that you're talking about. For me, a lot of your story really kind of clicks because I see you building at the edges of the platform shifts and then, patiently being in the market until things come together and demand is there. And that's certainly the case now for DeFi as more and more assets transition into Web3 and then more assets are built out of Web3 and more decentralized autonomous organizations are growing and managing their balance sheets. They need tools like this. And so, it's really fantastic to hear about your progress. If our listeners want to learn more about you or learn more about the protocol, where should they go?
They should go to our website, perp.com. So we have everything there. If you want to reach out to us, you can just join our Discord or Telegram. You can reach out to the team. I'm there. And then the community is really helpful. You can ask any question you have. So yeah, welcome everyone to join, our community. I think that will be really fun.
Fantastic. Yenwen, thank you so much for joining us today.
Yeah, thanks for having me. It's really nice talking to you.
My pleasure. Hi, everyone. That's it for this week's episode of the FinTech Blueprint. For more technical deep dives into all things fintech and decentralized finance, check out fintechblueprint.com and grab a free subscription to the newsletter. This is Lex, and I'll see you next time.